to introduce, I almost said doctor.
No, I am not a doctor.
Mohamed Ismail. He is the CEO and founder of Shift Accounting. So hopefully each practice has an accountant. I need to nod, yes, okay. Otherwise, things are not going well. Yeah, we're going to talk about your accountant. I know you have one. We're going to talk about that later. I met Mohamed, I guess, last PDC, and we started talking about philosophy, and we've had dinner a couple times, and Terry keeps him on his toes at soccer every Monday night and Wednesday, yeah, when their kids get together. But he looks at the numbers of a practice differently than most accountants. So I wanted to bring him into my world to work with practices whenever possible. But again, his philosophy with education and my philosophy with education and educating business owners and managers to look at things through the set of eyes that make a difference for the practice is really important. So typically what I experience when I go into practices all across the country is I ask the question, oh, you have an accountant, you have a bookkeeper, and then the typical response is, I send a banker's box of stuff at the end of the year, and then they file my taxes. And then I start to sweat again. That really makes me uncomfortable about how the practice is managed. We need to have information from all the different people in our world to be able to make decisions on the fly. I don't want to know a year later that something didn't work. That's not helpful for me as a business owner, as a manager. I want to know within 30 days if I need to make a change, be flexible, or pivot something in my business, in my culture, with my employees, with the services I offer, with how we're doing things, with our communication, whatever it happens to be. So the way that he works with his clients is a little bit different. He's a little bit more hands-on and gives the information, and he's really about education, which is fantastic. So I will let you get started. I will stop talking. I may jump in.
Absolutely. Well, Bianca, thank you so much for this introduction, and also thank you for inviting me here, and thank you guys for being here. This is great. What I'm looking forward to do in the next hour and hopefully 20 minutes, okay, to make this very interactive. So I love working with smaller groups because we can really, get into it, share more details, right? So I'm not really looking to stand here and give you information. I'm actually looking forward to have a conversation, okay? So throughout the presentation, feel free to interrupt me because that would just kind of generate a conversation that we can talk about. But also, if we have time, I'm going to try to leave at least 10 minutes to the end where we do have a discussion, okay? Tyler, I had to change my presentation for you. Have 3 boys. I could not convince them to be accountants. Do you have any tips for me? That's what I told them, but they're still not convinced. Right? So I want to start my presentation today by showing you some clinics for sale, okay? And I want to show you a correlation between clinic value, okay, and profitability. So I pulled this information from Avail Dental, okay? He's a broker in Alberta, okay? So this is a publicly available information, okay? And I massaged the data just a little bit. I only added 1 column, okay? Everything else is the same data. So what I added is the multiplier, okay? And you can see that on this side, okay? And what's a multiplier is really taking the asking price divided by profitability. And essentially, think about it a little bit different, is how the multiplier is showing you future earnings in years, okay? So if we look at, let's take the first clinic, okay? What you're buying is 5 years of future earnings, okay? That's the value of that clinic, okay? Make sense? Yeah? Just for fun, Apple is about 25. The multiplier is 25 for Apple, okay? So in dental clinics, what we see these days, 5 is low, okay? Before interest went crazy, we saw up to 8, 9. If you have a group practice, I've seen 10 and 11. Okay? So, but that's not the conversation we're having today. What we're having today is the relationship between the value of the clinic and your profitability. Okay? So let's just make the data a little bit. So I took 2 clinics, okay? On paper, they look the same, right? But obviously the devil in the detail. But let's just entertain this idea. 2 clinics, they look the same. 7 ops, both of them, okay? One has a production of 1.7, okay? And the other one is 1.3, okay? Asking price, 1.5, okay? For the clinic that's producing more, okay? And the other one is 2.2, okay? Hygiene, 22%, and then 33%. Okay, I'm gonna just stop here. Hygiene is a really good conversation, okay? It's also the hygienist, yes. There is a correlation between how efficient your hygiene and your profitability. If your hygiene is high, okay, I know, I agree. If you have a high production in hygiene, your profitability will go up, okay? Now, why is that? I mean, there's a lot of...
Higher than their cost, like their overhead is lower.
Absolutely, okay? In a simplistic way, every hygiene dollar that you bring into the practice, you're paying about 33 to 35% for that dollar. Where in dentistry, you're paying 40% on that dollar plus your supplies, plus the RDA, plus, okay? So that dollar is more expensive, right? So you could see one clinic has an efficient hygiene department, the other one is less efficient, okay? Net income, very close for both clinics at 300 and 325. Look at profitability, 18% to 24%, okay? And then the multiple, okay? So if you look at these 2 clinics, and I'm gonna make assumptions, just walk with me with this. Clinic number 1, they're working harder, longer to produce that 1.7, right? Somebody had to work hard to do that 1.7. The other clinic had to work less hard, right? The clinic that worked harder to produce that 1.7 was not efficient in keeping the profit or generating profit, right? Could be staffing, could be supplies, could be, we don't know, right? Could be many things, right? So they were good in producing 1.7, not efficient in that operation. Where the other clinic, the smaller one, okay, they were efficient in terms of their profitability. So their staffing cost was in line probably, their supplies, their marketing, rent, whatever it is, it was a little bit more efficient, okay? Look at the difference in multiplier, okay? Now, I'm gonna take you to the next slide. So let's assume they both had the same net income. It was only 25,000 difference, so it's not a big deal, okay? I'm using the market multiplier for both of them, okay? This is the market multiplier and the asking price. Look at the value that's lost because of the multiplier. That's $500,000 loss, right? That's $500,000 to your pocket that is gone. That's $500,000 that, depending on your situation, could be completely tax exempt, okay? So I hope this just shows you how important your profitability is, right? It's really important. It's something that you really absolutely need to focus on. If you have a profitable practice, you're most likely to be less stressed. If you are less stressed, you might make a more positive impact on your staff, on your patients, on your community, right? We have a practice that we work with in Ontario. Call it luck, call it bad luck, bad management. You can name it, whatever happened. But anyway, cash flow has just been hard for the past few years. And as a result, and this is no joke, we issue 3 to 4 ROEs per month for this office. And if you don't know what I'm talking about, meaning people leave, issue them an ROE, and new staff come in. 3 to 4 times a month on a practice that has maybe 15 people, right? So, I mean, again, could be bad management, could be so many things, but at the end of the day, staff come in, don't want to work for somebody who's stressed, right? And that just translates. I want to go back to this slide, and it's really not part of my presentation, but I want to just highlight one important thing. So I just highlighted to you guys, if you own a clinic, it's so important to improve your profitability, right? And now I'm going to show you, if you're in the market to buy a clinic, which clinic would you be more interested in buying? I agree. I'm actually, from an accounting, again, from an accounting perspective, okay, I'm actually interested in number one, okay, for 2 reasons. Reason number one, okay, one more thing. Assuming that I'm a really good operator, right? Okay, because if you're not a good operator and this is your first crack at this, I would stay from number one, right? But why I'm saying this is because if you're in the market of buying a clinic, okay, and assuming you're a good operator, the big DSOs, they're probably not going to look at number one, right? And whatever the scenario here is, that dentist is probably struggling to sell that clinic because again, people say, "Oh, you're not making money," and whatnot. But I'm going to show you by the end of the presentation is how good systems, a lot of focus, we could pull that profitability up, right? And now you potentially got a clinic at a discount, right? Because a clinic that's doing 18%, there's a lot of room to grow. There's a lot of things we could do. Lots of like low-hanging fruits. A clinic that's doing 24%, it's tough, right? They're really doing good. You know, to get it from 24% to 30%, for example, it's a lot of work, right? It's a lot of work. Okay. So, how do we improve profitability? There's only 2 levers, right? Increase production, right? Work harder, longer, smarter, hire people, add more services, increase your fees, right? And that's all options to improve profitability. And the second one is cut costs. Well, let's just change that. I don't like to say cut costs, right? I would say manage your expenses, right? Run, a better financial operation. That's honestly the 2 levers that you have. That's it. There's nothing else you could do, okay? And in most cases, you got to do both of them, to be honest with you. And there's a lot more emphasis on increasing your production because I'm going to show you examples where you really can't cut costs. Like, what else are you going to do? You need people, you need your facility, you need the supplies, you need all of these things, okay? So in most cases, you got to do both, okay? But for today's conversation, we are going to focus on managing expenses, okay? Okay, so managing expenses, I broke that into 4 areas that we want to talk about today, okay? We want to talk about financial assessment, okay? What's happening in your clinic as we speak. Financial controls, okay? We're going to talk about KPIs, and we are going to end with an action plan, okay? And once we go all over these 4 areas, we're going to walk through an example. I have some financials. We're going to do a tear down, bring these financials up, and we're going to walk through them, okay? Okay, so financial assessment. You can't improve anything if you don't understand what you have, right? You need to look at what is going on with your financial assessment here, what you have. So let's start with, are you actually getting any reports, right? Monthly, weekly, annually, quarterly, right? Are they accurate, right? Are they actionable? Maybe they're actionable, but you're not taking the action, right? Maybe you don't know what action to take, right? So that's the first thing that you gotta figure out, right? Number two, and I know Bianca, you mentioned like everybody has an accountant, and that's great. So your tax accountant is fantastic. Most dentists have fantastic tax accountants, okay? Their job is to help you minimize your tax liability and keep you out of jail. And a lot of them are doing a really good job with that, right? Because I did not hear about a dentist recently that went to jail because of taxes. Maybe, but I haven't heard one recently, okay? But that's their job. That's what they're doing. That's what you pay them for, right? You might have a bookkeeper whose their job is to process data. They're making payroll, they're paying the bills, they're paying, the doctors, right? So in your setup right now, who is advising you and guiding you and showing you, for example, okay, what's happening with your KPIs? Let's look at the cash flow. What's, where areas that we need to manage? Do you have that support? So if you don't have the support, either you have to lead it. So you got to go to your tax accountant. It's like, listen, I need way more support. I need you to give me financials, forecasts, budgets, whatever it is, right? Or you have to find someone who can help you. Accounting infrastructure. Okay, so if we're having this conversation in 2015, I will tell you, Shift Accounting is very efficient in gathering data. And he told me, how? I was like, we are going to work with your courier when they go pick up cases from the clinic. We're going to tell them to pick up the paperwork as well. And this way, we're going to split the cost between us and you. And this is how we get the information to our offices. Efficient, right? So that was 2015, okay? Now, obviously, everybody's aware of cloud accounting tools, cloud document management systems, and so on. So what's your system, right? Are you still putting everything in a shoebox or envelopes or whatever it is and send it to your accountant once a year or, whatever interval you have? You got to look into that system. I know I'm asking you as a dentist to look at accounting system, and that's not your expertise. But if that's where you are, you have to question it, okay? Recently this year, we onboarded 2 clinics in a panic, okay? Bookkeeper quit. The accounting system is in the clinic, but it's password protected, and nobody has access to it, okay? And they call us like, hey, Shift Accounting, can you, like, we have payroll in a week. I was like, okay, how do you pay people? Oh, we log into the accounting software and we cut checks. Okay, how can we access it? Well, nobody can access it. I was like, oh, okay. What do you want us to do? Right? So everybody here in the room, please make sure you have access to your systems. I know you hire someone, your accountant's doing it, that's fine, or your bookkeeper, but make sure you have access to it just in case. That's your data at the end of the day, right? You need to have access to this data.
If not, I know some good hackers.
Right. So in just to kind of complete the story, in these 2 cases, they had to call their IT. IT had to kind of break into the system, blah, blah, blah. I mean, a few $1,000s of cost to kind of solve these problems, right? So once you do this assessment, you're going to figure out what gaps you have, right? And based on these gaps, act accordingly, right? Whatever in out of these 3 areas. Okay, financial controls. So financial controls, okay, they're procedures to safeguard your assets. Make sure that you have checks and balances in place, okay? The speakers talked yesterday about, cybersecurity and computer systems. Financial controls is really looking at your financial operation, and it's also looking at embezzlement, okay? Embezzlement is a big deal in dentistry. It happens a lot, more than you think. And because of shame, people don't really talk about it, right? Just, okay, I had an employee who was so great. We trusted that employee with everything, and suddenly something happened, right? So you gotta have internal controls in place, okay? We're gonna talk about what these financial controls that we're talking about. Okay, so I wanted to kind of break internal controls into these areas, okay? Accounts receivable, accounts payable, and day-end review, okay? And each one, we are going to talk a little bit more in detail just to kind of tell you what we're talking about. Okay, so when we think about accounts receivable, at the end of the day, accounts receivable is just the money that's coming into your office, okay? Do you have systems in place to make sure that you're actually collecting? This is way harder than you guys think, right? A lot of dentists, unfortunately, just look at the bank account. It's like, yeah, we have money. I think all the money is here, and we just move on. When the money is not in the bank, they're screaming, right? So, number one, let's start with putting payments on time. I know Bianca yesterday, we talked about like if you have checks and you have other things that you need to do, and I agree with her, right? Because you need to make sure the schedule is full, right? I 100% agree. But at the same time, maybe you need to give that person whose responsibility to put the payments in, maybe give them an extra half an hour to complete that task. Maybe delegate that task, right? Because at the end of the day, if the payments are not going into your computer on time, it screws up your doctor pay, right? Sometimes, so many times, a clinic, for example, running a line of credit, as an example, okay? And then they have checks on the drawer. How does that make sense? You're paying interest every single day on your line of credit, and you have money sitting in the drawer, right? We had a few cases where somehow the check fell behind the desk, okay, and nobody noticed, right? And the only way that somebody noticed is the insurance company after like 8 months or 1 year, they called the office like, hey, you have $8,000 that are not deposited, and we're gonna send you another check. It's like, oh, yeah, I think it fell behind the desk and nobody knew, right? So you gotta have systems, right? At the day end balances, right? I think everybody knows, how to do that or what that means. Process for handling checks and cash. At year end, we go through a rigorous review of all the financials and whatnot, and then we put this in a bow and give it to the tax accountant. So I called this dentist and I said, I honestly was so nervous, I don't know what to tell him. Because there's $70,000 missing. I was like, I don't know what to say. The reports, I'm seeing the reports, and I see a $70,000 missing. And I called my team, I was like, guys, can you just double check? Maybe there's something that we missed. I was like, all right, I mean, we did everything we can. We can't see the $70,000. So I called the dentist. I was like, listen, our file is almost done, and we're going to give this stuff to your accountant. I have one question. There's $70,000 not in the bank. And it shows cash. I mean, when you pull, the Dentrix report or whatever report, it shows that they received 70,000. You don't see 70,000 in the bank. He said, yeah, I actually have it. What do you mean you have it? Like, where is this money? I was like, oh, I just kind of didn't go to the bank. and again, we're talking about a small practice. This is 70,000 that happens over a few months. Okay, it's his money. Who cares? But as a leader, that's bad leadership, right? Because what you're doing is you're not setting the tone in the office, right? If you don't care about your cash, do you think your staff going to care about your cash? No, right? So again, depositing cash and checks, you got to have a process. When we receive money, it goes to the bank, and we know who's the assigned person, and we have documentation. We have all of that. That's financial leadership. That's financial control. AR? Oh, AR is fun. Who does AR here? Who's responsible? Oh, okay. I sympathize with you. Right? It's a hard job. Collecting money, it's not fun. Right? Nobody wants to do it. Right? Nobody wants to pick up the phone and call like, hey, you owe us $5. Can I run your credit card? Like, let's be honest, nobody likes to do that, right? So number one, we start with good systems, meaning credit cards on file, everything we have that. Maybe if we don't know the EOB, maybe just take 22%, for example, or whatever it is, right? You better be in a refund position than trying to collect that $5, right? I'm happy to issue refunds all day long, guys, right? So AR, it's hard. It's a lot of work. If you don't have good processes in place and systems, AR can creep up, and good luck, trying to collect it, right? So make sure you have systems in place. Dentists, go and look at your 60 to 90 and 90 and over 90, right? Because if you see, balances, large balances there, that's a problem already. Okay, accounts payable. So we talked about, process for refunds. Personally, I don't like the offices to issue refunds from the terminal. Okay, and what I mean by that, let's say I came to your office and there's a small balance, and now you want to refund it to my credit card. I actually don't like that. From your perspective, from as a patient perspective, yeah, I like that, right? The reason why is because there's so many embezzlement cases where people run their own credit cards and nobody would know, right? So for example, just walking with that example, let's say there is a balance of $20 on my ledger, okay? And somebody just goes and made the refund, but not to my credit card. And as a patient, I wouldn't know. How would I know that there was a balance of $20, right? One case here in Calgary, okay? It was so interesting how we discovered this. Every day there's money come in, money goes out, everything balanced. You look at the reports, everything balances. How would you know as a dentist that the refund of $20 that came actually to me? You don't know. You just see a refund and that's it. You have no idea that that refund went to me or no. Reports are balanced. The bank statement is balanced. So how we caught this person? We saw refunds on Sunday. The office is not open on Sunday, right? So, yes, Bianca. Pull the bank statement, or we had access to the bank account, right? As we're doing the reconciliation. It's like, that's...
From a manager perspective, every practice management software is use your audit trail as a management tool. Don't just look at it when there's a problem. Look at it for trends, habits, and patterns. I work with the two fraud and investment companies in Canada, and I get referrals regularly that are caused by audit trail. It's a huge tool, but just make sure you have a software that has good audit trail. Right.
And if you don't have that, manual labor. That's the only way to do it, to be honest with you, right? One more thing just about this topic, okay? Can you eliminate the risk of embezzlement in your clinic? And the answer is no, you cannot. You can minimize it, but you cannot eliminate it. So the fact that setting up these internal controls, okay, you have systems in place to make sure that you're watching it, but also you're sending a signal to everybody that, hey, we're watching, we have systems, right? Where are we? Okay, review vendor invoices, right? So again, you guys have a lot of vendors, there's a lot of purchasing. Somebody in your clinic needs to look at the invoice, make sure the pricing is correct, the material was received, it is the correct material. When you have credits, they're actually applied. And to be honest with you guys, that job, you cannot outsource it, right? Because you guys are the only ones who know what you bought, how much was it received. That work needs to happen in the office, okay? Organization of documents, right? And when we talked about the shoebox, right? Now there's a lot of cloud tools that you could use to organize. AI could search your, digital filing cabinet to pull things. So there are a lot of tools to be organized. This is easy these days, right? Who wants a free breakfast? All right. Okay, Bianca, one day, pull up your credit card statement and look at every transaction you have. I can guarantee you have subscriptions that you don't even know what they are for. And by eliminating these subscriptions that you have no idea what they are for, you saved your money for breakfast. There's so many people that they have so many subscriptions, and you ask them, they have no idea what they are. And sure, it's $5, $10, whatever it is, and they just they don't have the time. And guess what? At the end of the year, that's $200 that just nobody knew what was that for, right? So I'm giving you an example of this is obviously basic example, but why I'm saying review your credit card and bank statements and understand your transactions, because that's how you're gonna know what's happening in your clinic, right? Day in review. Okay, so Bianca, I need you to kind of help me here. So my preference is every provider in your clinic, at the end of the day, they look at their production, they look at their write-offs, because at the end of the day, you know what you bill, you know what you authorize as a write-off, and if there's an issue, you're gonna deal with it that day, right? I want associates to do that. And sometimes I hear like, oh, you know what? I don't want the associate to see this. Didn't you not think that the associate doesn't know what they built or how much they made, or they know that, right? I actually even want hygienists to do it, because at the end of the day, if they see their billing for that day, they'll be more diligent. The billing would be accurate, right? If there is unauthorized write-offs, hopefully will be caught. Bianca, what do you think?
So I like to have each clinical provider, so if you're a licensed provider, to have an individual, an individual day and production. And my teams are 100% at this, so it has to be signed off that day. I can't sit on the doctor's desk the next day, ready to the next day. 100%. 100%.
It's Simon.
Simon? He's talking a lot better than he's like, yeah, 94%. Oh, yeah. So there's a couple reasons for that. So doctors may not know, hygienists may not know that if your admin team has to reverse something with an insurance company because an incorrect quote was sent in, it has to be done that day, or else we have to go through a 30-day process or 60-day process with an insurance company, and a whole bunch of paperwork, wait on hold, like it's a whole thing. Not all insurance companies can reverse those counts the same day, but some we can. So we want to take advantage of that whenever possible. The other thing is, it's important if you have a license to bill under that you are aware of what is being billed under your name. 80% of offices experience fraud and embezzlement. 80%. That is such a huge number. It's shocking here. But when the investigators call me and I go into audit practice or train them on how to do things properly, 10 times out of 10, no one's looking at the day end production. They have no idea what the write-offs are. They have no idea. So sometimes if you have people, and I'm not saying you do right now, but you don't know who you're going to hire in the future. And that's why we put these things in place. We don't know what's coming in the door. We had the bailiff deliver unfortunate news to a receptionist who was doing exactly that. She had 5 different credit cards at 5 different banks and was refunding herself money. And what she would do is she would go in and bill up something that you like can't see on your nomogram, so like perio surgery or neck guard, and then it would be a credit, and then she would refund it to her credit card once. So there's lots of crazy things. So not only should you look at it every day that you're working, but Saturday and Sunday as well. Okay? If your employees have remote access to your office, make sure you're checking on the things that they're doing. Use that audit trail as a management tool. So important.
Yeah, can I say too, like, I think I always forget too that the people who are getting embezzled from you are very charming.
Oh,
They're like narcissists and like they get you. So like I think a lot of us think, oh, I don't hire bad people. Like no one's gonna do that to me, but they're like it hasn't happened to me, but I've met one. I have that one. And I was actually, yeah, she is, and I was actually jealous. I actually wanted her as my office manager, and then like I was sitting there talking to her, and then all the memories flooded back into my head, and I like had to prevent myself from gasping. But I remember just being like enamored with her, and be like, oh my God, I wish I had a manager like that. And then they come across so
Yeah. They'll house sing for you. They'll walk
Yeah.
your dog. They'll babysit your kids. They will look you in the eye every day and steal from you. Horrible. It's such a violating feeling.
No, this was good. Okay, so this is why you have to have all these financial controls, right? Internal controls, financial controls. You have to have them in place. A, to know how this information is going to flow to your P&L, right? If you have issues that will impact your P&L, they're going to show up here, whether it's production, write-offs, things are not being deposited, they're all going to show up here. And also, as we talked about, embezzlement is a really big deal. Okay. KPIs. So, I mean, most of you know what KPIs are and dashboards and all of that stuff. I want you to think about how to approach KPIs. Okay, Bianca, you're so excited. So, I want you to think about KPIs. Think about your car dashboard. Okay. How many gauges do you have? I mean, if you're probably driving a gas-powered engine, you probably have 3, 4, right? You know, speed, you know, RPM, gas, right? There's so many moving parts under your engine, but you only have, you know, 4, let's say 4 gauges, right? But then suddenly, you know, like the engine light comes up, right? Now we really have to investigate what's going on. So when you think about KPIs, and this is really specifically for the dentist, I want you to think about, don't try to track everything under the sun, right? You are going to get bombarded with that information. Look at few KPIs, okay, that will give you the big picture of your clinic. When you see that red light flashing in one of your KPIs, then that's when you have to dig. For office managers, you guys need a little bit more than 4 KPIs, right? To, you know, kind of understand what's happening, right? So I put in this page just a few that I think are important, okay? So for dentists, daily production, in my opinion, is the most important KPI for you, okay? Why I think that is because if you're doing, let's say, $2,000 a day, okay, we need to dig a lot to figure out why are you doing $2,000 a day, okay? But if you're doing, let's say, $5,000, $6,000 a day, that's good, right? Maybe we'll just keep it or investigate a little bit further, okay? Rebooking rate, right? Samantha put this, so I'm gonna just skip it. She thinks it's important, so we'll just leave it, okay? Hygiene, okay? There are a few that I like to monitor, okay? And then, you know, any hygienist wants to jump in, let me know if there's other important KPIs that you guys wanna monitor. So for example, production per day, okay, in my opinion is very important. Production per hour, I really like that, okay? And just to give you an example, if you're here in Alberta and you're following the fee guide, and when I say production per hour, I'm actually looking at total production divided by payroll hours. Very easy to figure out, okay? I'm looking at 215 to 220 per hour, right? That's not per appointment, okay? That's in Alberta, yeah, right? So why is this important? Is because if you're not hitting that target, that tells me you might have gaps in your schedule, okay? You might be not billing enough, okay? Or you might be, I mean, maybe it's a clinical, and at that point, you know, as a dentist, you got to go figure out what's going on, right? But this is an example where, as a dentist, you have that KPI, you're looking at it, okay, you know, it's not blinking red, okay, things are good, right? If it's blinking red, let's go deeper and figure out, okay? Rebooking rate, to be honest with you, that's a very important, and I think it's a combination metric between the hygienists themselves and also the front desk. But actually, personally, and maybe people are not going to agree with me, I like people to be booking in the back. You finish your hygiene appointment, it's like, okay, we need to see you in 3 months, 4 months, 6 months, whatever it is. Oh, I don't know. That's okay. We're going to just put something in the calendar. We're going to send you reminders. We're going to do everything. So then in that case, why is the rebooking rate not at 90%? Should be, right? I mean, I'm sure there's patients who will say, absolutely no, I don't know. And you know, but should be around 90%, I think. Okay. Administrative. So we talked about AR. Okay. Collections, cancellations, recall. I love recall. Like, you know, that's one of, honestly, a really good metric. Okay. New patient flow, unscheduled treatment, and attrition. This is one metric that a lot of people don't pay attention to. Okay. Everybody focuses on new patient flow. How many new patients are you getting? Oh, we're getting 40, we're getting 50. We have a clinic that's getting 100 new patients. Like, no joke, 100 new patients a month. Okay? Look at how many active patients they have, like an active mean 18 months. 100 goes out of the door every single month. So what are we doing? We're paying marketing, right, to bring these patients in. I mean, they're paying a lot of money to bring 100 new patients every day, every month. Why are we not developing the relationship to keep these patients, right? Relationship, messaging, whatever it is. So a lot of people don't pay attention to that metric. And to be honest with you, it's not also easy to pay attention to, right? You actually have to do a little bit of math. You know, in Recall Max or whatever software, like I did not see, you know, softwares that have that as a metric, right? So you got to do maybe a little bit of math to calculate that number. Okay, so what did we, let me just go back. Okay, so we talked about KPIs. So to just summarize this part, set up your dashboard, right? And, you know, whether it's a combination between the softwares that you have, you know, your office manager, whatever it is, just set it up. Make sure that you have a dashboard, right? That you need to look at. Okay?
So I firmly believe in KPIs. I built a spreadsheet for my teams, and we review it every month together, managers and dentists. But when you're implementing this in your practice, there's a realistic aspect of it. Please don't go to your receptionist and be like, I need all these numbers every day and every week. You're going to be completely overwhelmed and be like, why are you suddenly looking at everything? Do you think I did something wrong? Are you, you're trying to micromanage me? Have a conversation, like we talked about, that communication, that implementation, do it slowly. Okay, first we're going to start looking at these. So even when I build the KPIs and we do like our monthly managers meetings and stuff, I at the first stage I look at probably 80% of it, and then year number 2 or 3, then I add in more details. Then I add in more details. Okay, until we have a full robust system that makes sense for the practice. So don't just come in tomorrow and just like, let's look at absolutely everything. They're going to put your staff in this fall. Okay, do a nice, slow, and steady plan. Use your agendas, plan it out. Here's what I want to work at first. What does that information mean? So we can look at continuing to our recalls, but what's our goal? What's our target? What's the benchmark? What does a healthy practice look like? What does unhealthy practice look like? And that's where it helps to have someone that, like you're looking for accountant, if you're working with other dental practices, and they have staff built into their brain. They see, like, if we're 50 practices, here's what a healthy practice looks like. So use that information when you're putting this in place.
Okay, anybody read this book? No? Okay. Yes? Perfect. So before we go into an action plan, I actually want you to read this book, right? Because if it's so great that we got to this part where we looked at our systems and we did all of that stuff, but if we don't train our muscle to build that habit, to take that action plan and actually implement it, it's not going to work, okay? It's not going to work. So this book, I mean, the summary of it, you got to remove friction, right? If you want a habit to stick, remove that friction, right? Meaning, how are we going to remove that friction? Okay, well, now we talked about what reports we need. Well, I need them, let's say, by the 3rd or the 4th week of the following month. That's it. It's communicated to that person that you're working with. They will be giving you that report, right? The report format need to be standard. I don't want to see a report that's different every single month, right? I don't have the brain power to, figure out a financial report that's different every single month. I want it to be consistent, right? You as a dentist, book time in your schedule, in your calendar to actually review this information, okay? It has to be. You have to give it the time. Personally, when I started Shift Accounting, just like any other business, it took a lot of work. I mean, you gotta, do the work, do the meetings, marketing, HR, do all of that. So for me, my wife, my kids, my parents, everybody knows that Sunday afternoon, don't schedule me in anything because I'm working. That's the time where I work on my business. Okay? So it's a habit that I developed, 10 years ago. It's serving me really well. I now use that habit to escape any family obligations. Right? It's great. Right? Okay. So, an action plan, the summary of it is, it's just that rigorous review of the data and taking action. At the end of the day, now we have the data, we need to review it and we need to take action. Okay, so for dentists, I broke this into reviewing your KPIs and reviewing your financial statements, okay? Because reviewing one only is not gonna give you the full picture. So you don't actually need to review both of them, okay? So on your Sunday afternoon, when your kids are not bothering you, right? Nobody's calling you because you already set the tone, right? How you want to spend your Sunday afternoon. Look at new patients. Where are they coming from? Are we doing the Google reviews? Did we hit the target? Right? Whatever metrics that you did, look at it. Investigate. Okay? Production analysis, right? Look, I'm on the belief that I don't want you to run your clinic from a numbers perspective, and I'm an accountant. Okay? Why is that? Because at the end of the day, you went into this profession for patient care, right? So I'm not saying to you, run with the numbers to your, staff. And it's like, why, you did not produce. So that's not how you should run your business. That's my belief, okay? I actually think about it from, if we do everything right, all your KPIs, all the money, it will show up. How do we do everything right? Right? Did we show up on time? Is the schedule filled? Did we do the follow-ups? Did we do the predetermination? Whatever system you have, did we do these things? Because at the end of the day, if we didn't do these things, then we really did not give the patient care that it deserved, right? Okay? So, but you as a dentist, these are indicators for you, right? We're not saying run the practice as like, hey, a profit, money, money, money. That's not what we're saying. Look at these indicators as something in my system that is not working. Okay? Recall, collection. So this is the KPIs that you need to look at. From a financial perspective, obviously we look at revenue, cost, profitability, cash flow. That all of these items would show up in your financials. How much time do we have? I feel like we're really running out of time. No, we're good? How many? 10 minutes. 10 minutes, okay. All right. Whew, I thought like, oh man, like this is. All right. So, one thing I just want to circle back. I know in the previous session, everybody was talking about meetings. How come you can't meet people? People at different, times and whatnot. One more tip about the Sunday afternoon. This is how I communicate with my staff. Okay. So something that I need them to do, I actually use Loom. Anybody familiar with Loom? Loom video?
I know, but I don't use it.
I love Loom, okay? And why I love it is because, let's say I'm looking at a financial statement, and again, I'm giving you an example as I am working with my staff. I'm looking at a financial statement, okay? I need them to change things. You think I'm gonna sit and type it, or it's like, oh, let's jump in a meeting, can you change it? No, I don't have time. And also, the recipient, for example, maybe is busy, And in a clinic, that's exactly what's happening. So what I do is I use Loom. It's a screen recorder, right? So for example, let's say I'm sitting here reviewing, my new patient or whatever it is, and now I need to communicate to my office manager on what I need them to do. I don't need to take them out of work or now schedule a time. I can actually do it on Sunday, record all my talking points, right? Visual, audio, you can see my screen. I'm giving them all the information they need, and I send it to them, and then they open the video, and they can just follow what I just said, right? Loom is a fantastic tool. It's a one-way communication. You're not interrupting the other person. The other person is not waiting for you. It's an amazing tool. I actually even use it with my clients, right? I mean, you guys know, it's so hard to schedule time with you guys, right? So you don't have to schedule time with me because I'm going to send you a Loom video talking about everything that I need you to listen to, send it to you. If you have questions, call me. So now the conversation is actually condensed, focused. When I started, I would get a call. How is my business? I just sent you a 15-page report. Like, what do you want me to say? Like, right? I mean, it's a lot of information. But now when I send the Loom video, right, I highlight, for example, like the few things that I want them to look at. And if they have a specific question, they just call me. It's like, hey, can you tell me more about this piece? So you could do that with your staff. Office managers, look at that Loom. I mean, honestly, like if you have different schedules and whatnot, record something, give it to them. They can open it on the phone. They can see exactly what you're talking about, visual, audio. I think it's fantastic. Okay, so let's do a financial teardown. So take out your loops. No loops? Okay. All right, so I know, I kind of figured that you guys will not have loops. So what I'm doing, so just very, very high level from here, profitability of this clinic is 12%, okay? So this is what we're looking at. So we have a clinic that profitability is 12% only, and production is 200,000 per month, okay? So, all right, since people don't have loops today, I took that P&L, I chunked it, right? So in 3 different chunks, okay? So if this is my clinic and I'm reviewing this on a Sunday night or afternoon, okay, what am I looking at, okay? So number 1, I like the report to be in this format every single month, meaning I want my dental billing to be separated from my hygiene. Why is that? Because I want to see hygiene. I don't want that number to be just lump sum as one number, right? I want to see dental, I want to see hygiene, and I want to see my write-offs, okay? So, number 2, I like to see my year-to-date and a percentage, okay? So year-to-date, I mean, everybody has a different fiscal year, so just figure out, what's your year-to-date. I like to see at least 4 months, right, of data. I don't want to see 1 month because 1 month does not give me a full picture, right? So at least use a format that's similar to this. Okay, so if I'm looking at this financial statement, okay, so there's a few things I already don't like. Okay, I don't like hygiene. It's 29% of total production. Now, if we're having this conversation before the pandemic, 31 would be okay, 30 would be okay, but I don't know what happened, and I also don't have a clear answer. Hygiene picked up after the pandemic, and it did not slow down. So people who are doing 30% in hygiene, now they're doing 35, 37% in hygiene, right? I don't know. Suddenly hygiene became important after the pandemic. Do you guys feel the same way? Anybody has an answer for me? No? Yes, Bianca.
So after COVID, I know that few offices, some offices I work with around the world, that because of the return to work protocols for the provincial bodies, we had to be very specific with what we could do, what we couldn't do, but how the patients were treated with the return to work. So a lot of our hygiene equipment went from an hour to an hour and a half, 2 hours.
Mm.
So, and when that happens, our scaling units went from like 3 to 4, 5, 6. So when you're billing straight scaling for that patient care time, it's your productivity is way higher.
Mm. Right.
And sorry, the other thing is that
and it's still strong, right? So if that's a problem in your office, for example, hygiene is, production is low, figure out what's going on. Meet with the providers, see what's happening. Is it billing? Is it a schedule falling apart? Whatever it is, figure that out. Write-offs. I mean, again, if you're dealing with this on a daily basis that just we talked about, then you will know why we have that many write-offs. Okay. Next, sorry, I know this is still small, but my apologies. So that section now, we have associate fees, dental supplies, implants, lab, ortho, and wages. So let's focus on that section. Okay, so associate fees, 24%, and this is assuming that the main dentist is also being paid as an associate. I'm okay with that, okay? Dental supplies, this is great. I mean, this office is, 5.2. I have no concerns, okay? Implant is so small. Lab fees, to be honest with you, lab fees is one of these expenses that if I don't see it, I'm actually concerned. So I want to see it, actually. That means you're doing, the bridges and crowns and whatnot. So I'm happy with that, okay? All right, wages, almost 30%. Okay, so if that is your office, what should you do? Okay, because that is actually not telling me much. It's just telling me your wages and salaries are 30% of your production. Yes. Okay. Okay. It is broken. You have associate in the top, right? So that's all the staff. Let's put it this way, right? Okay. So it's honestly a personal preference, and I'll tell you my preference. But honestly, choose your own adventure. Why I like to put everything in under one line item, because at the end of the day, all I care about is how is my staff wages as a whole compared to my production, okay? And if there's a problem, I'm going to investigate. I'm going to tell you how I'm going to investigate that. So I have a problem. Obviously, I do have a problem here, right? Now I need to isolate that problem to figure out what is causing this problem for me. Is it the front? Is it the hygienist? Is it the assistant? And I'm going to tell you very quickly how I'll investigate. Okay, so one metric for front desk, okay? If you're an assignment office, okay, and I'm going to be just use Alberta, okay, because you might have a little bit different metrics. So if you're in Alberta, you're an assignment office. For every 85 to 105,000 in production, you need one admin, okay? So if I have 4 admins in this practice that's making $200,000, I'm overstaffed in the front. I actually don't need to do more analysis. I can tell you we are overstaffed in the front, right? So that's a very high level metric to kind of figure out, okay, how is my front desk, okay? Hygienists, okay? I'm gonna give you this example, okay? Let's say I have 2 hygienists, okay? And one makes $40 an hour and one makes $60 an hour. And the $60 an hour came to me and said, I want a raise. What are you gonna say? What are you gonna say? I love it. So the $40 an hour, okay, you might need to reduce their wage, okay? Doesn't mean that somebody's making $40 an hour and somebody's making $60 an hour by default that $40 an hour is underpaid. That doesn't, and I'm gonna give you an example. Let's say the $60 an hour, okay, when you look at their production, how much they're producing for you is, let's say, under 30%, right? They're very efficient. You can give them a raise, right? Because that ratio should be between 30 to 33%, right? Where that $40 an hour person, okay, their production to pay ratio is, let's say, 40%, and they come and they say, I want a raise. No, you're not getting a raise. But actually might have to kind of push you out, right? Because now you're costing us money, right? So take a look at your hygiene, right? And it's very easy ratios that you could do. Look at production, right, versus wage. Take that production divided by the wage, And if that's between 30 to 33%, 33 and a half, okay, I'll be okay. Yes. Um, right. It should not be more than 35%. And I actually don't like commission personally. Okay, and I'll tell you why I don't like commission personally. Okay, because suddenly now, and I've seen this happen, is you are going to have a lot of tension in your team. Okay, where we are in one team environment. Okay, at the end of the day, we care about patient, and now all I care about is my production. Right? You could use the same stats, as I said. I would not negotiate 35% with commission hygiene. I would not, because it will eat up your profitability. Your ratio should be between 30 to 33%. Right? Now, every situation is different. You know, obviously, like, staff shortage, all of that stuff. But yes.
Also, I'd like to mention that sometimes the hygienists come in and they're requesting X amount on commission, and then the next thing you know, that they're billing out dental codes that are actually not easy to collect for because they're not payable on the plan. And so I've seen in the past where perhaps difficult patient was billed out and so on and so forth. And so it's been one of those complicated conversations.
That's a really good point.
Base mission, is it based on production, based on collection?
Yeah.
Right. So if you're having those negotiations, these are things to really keep in mind.
And I personally will never put anybody on production, to be honest with you, right?
You see it a lot, and that's what they're asking for.
And that is very tough. And I'm going to show you why is this going to be very hard. So these are the conversation I want to, if this is your case, that's the analysis that you need to do, right? Okay. So looking at the rest of the P&L, okay, what's jumping here? We have consulting fees, 5.5%. We have a management salary of 3.6%, and we have our rent at 6%. So let's speculate, okay, on this. So staffing wage is high. We have a manager, and then we brought in a consultant, right? Obviously, something is wrong in this operation, right? Something is wrong, right? And this is, honestly, the hard conversation that you have to sit as an owner and figure out, okay, is my manager effective? Because if my manager apparently is not effective, that's why I brought in a consultant, right? Then why are we paying the manager, right? What systems do we have? This is the type of analysis you have to do in your financials.
What is because like I know it's a little different, but in BC, like I don't think 30% is realistic for hygiene because their fee codes are quite low for scaling compared to Alberta. So what is the ideal percentage?
I actually have few clients. Can I get back to you? Because I don't want to just give you a number. Let's connect. I do have few clients in BC, and I could get you that analysis. Okay.
Our hygiene is about, it's like 26 to 27%, and then and it's hard to push. Or did I do that off?
I don't know what your wages are now.
Yeah.
Because the wages in BC for hygienists have jumped.
Yeah.
Code hasn't. So it's not 30%.
No.
And I think maybe even higher. It's pretty high.
Yeah.
Well, it's pretty high too. Like we had a jump of like 25% in like 3 years.
Yeah.
At both offices. So
And so
Expense use the numbers from those two provinces is that both provinces had a like that's when I like in BC suddenly your 5 service billings are actually more than Alberta. So something like
but not hygiene.
But not hygiene.
Hygiene. But that
but when you're looking at your hygiene as a percentage of your production, it affects like you have to look at both.
Yeah.
right, your full-time hygienist, what's her production? Ballpark it. Full-time hygienist in BC, okay? And then when I say
In
full-time,
a month, maybe 20,000?
20,000?
Yeah.
I think that's too low.
Yeah, I was gonna say ours is higher.
Okay, let's, I'm as I said, like we do have clinics in BC, and I'm happy to have a conversation with you guys. Actually, if you scan that code, you can kind of put in your name, and I will schedule a call with you to look at these numbers, for free. Okay. Okay, so this is kind of the type of work that I want you to do on your P&L. So let's go to the bottom. So okay, that was the bottom part of the P&L. EBITDA, okay, that's trending word these days, right? It's 12%. Okay.
You know what that stands for? Yeah, you get it.
Earnings before interest, taxes, depreciation, and amortization.
Perfect. You must be an accountant. Here you go. I love it. So 12% for this practice, that's extremely low, like extremely low, right? Now, the P&L is not a cash flow statement, okay? And the difference between the two is timing difference of payments, okay? Think about it this way. Doctor pay for, what month are we in? We're October, right? So you are paying your doctors for production from last month, right? But the actual money is coming in the following month, okay? So that's why a P&L is different than a cash flow statement. Also, any equipment, loans, and whatnot, they're not showing up here. But let's just assume, they're the same. This practice is not even cash flowing. Like look at August, negative 15,000, right? We have not factored if they have the loan. We had not factored if they had other items that are happening in the balance sheet. Okay, in my opinion, it's a disaster, right? A practice this size should not be doing 12%. Okay, so what do? Remember, we have two levers. One is production, and one is managing costs, and you have to do both of them. So if we go back, right? I want hygiene to go up to 35%, right? I want dentistry. Look at the fluctuation in dentistry, 170 to 140. Sure, August, maybe people took vacations or whatever, completely understandable. But you as an owner need to know that. You as an owner need to know why my August numbers were down, right? Why did we overspend in this area? Why, any of these questions, you need to understand that, okay? What else do I have? Oh, so, okay, remember you guys when I showed you the KPIs in the financial report? Okay, so what I'm doing here is I'm putting everything together for you in one report. And this is what I want you to do. Your financials and KPIs all need to come together. So you're looking at, your AR over 90. Okay, good news, it's trending down. So for you as an owner, you need to see that it's trending down. You don't have problems. For anybody who's responsible of AR, you need to know, why do I have $8,000 still in my AR over 90? I know these people, they promised to pay, or we're sending them to collections. So for you as a dentist, you need to understand the high picture of what's happening. You as an office manager need to know the details of this, okay? I love Recall Max, right? I don't know if you guys love Recall Max. Yes, go ahead. 5 minutes, okay. Why I love Recall Max? Because, the data is nice. I'm sure there's other softwares. But for example, again, if this is my practice, my hygiene is low, and look how many patients we have unscheduled. This is a crime, right? So we don't have money, we're losing, we're not profitable, but we have 1,300 people in unscheduled. Like these people who came to the office, sat on the hygiene chair, and still not scheduled. Like, what is this? Right? So as an owner, you need to pay attention to this, okay? Missed appointment, they're doing really great. Look at this. 60, appointments that were filled in the same day. So they're not being proactive, like, to bring the patients back, but same day cancellation, they're really good at it, right? What do we got here? Unscheduled treatment, same issue, okay? Short notice list. I'm actually surprised how they managed to fill 60 same-day appointments and they don't have a short list unless they're not using the short list, right? Could be. Anyway. Oh, look at that. That's the problem, right? Pre-appointments. So people are walking out of their office with no appointments, right? I would be so pissed if this is my office. I'd be so pissed. Okay. All right. That's kind of the end of the presentation. Okay. So how many more minutes do we have? 3 minutes. Okay. Any questions? Yes.
You said with the non-assignment practice, for every 100,000, you need one admit?
Say 85.
Assignment.
Assignment.
Okay.
Yeah. Any other questions?
What should your gross profit goal be? Where should what rate should you fall in your profit?
Okay, good question. I can't believe that we didn't even talk about it. Okay, so her question is, what should be your profitability for your clinic? That's essentially it. Is that right?
Yeah.
Okay. Okay, so 20% profitability. Okay, let me just tell you what my assumptions here. My assumption is everybody's paid, even if you're an owner. It doesn't matter how you're paid. I want to pay you for your production, right? So if you're a working dentist on salary, on whatever, not taking money, in this calculation that I'm giving you, I'm factoring that you are paid 40% of your production. So everybody's paid, okay? And before interest and tax and all of that, 20% is okay, not great, okay. I want to see you between 20 to 25. That's great. 30% is amazing. I have offices who do 34%. Doable. I've seen it. And I'm talking about even a practice that's making 250, right? They can go to 31, 33% of profitability. But honestly, to do something like that, your team has to be so efficient and gel together that everything is working. Your front desk is working. Your hygiene is working. Doctor assistant relationship is amazing, right? All of these things come together, and my gosh, I honestly have offices who are very profitable and very happy, right? Because you could be profitable and very miserable, right? And you could be broke and miserable, right? So the idea is, how can you increase your profitability, okay, and really develop a really happy environment that people actually want to be here, right? It's way easier to motivate people, right, when everybody's happy, okay? Thank you very much. As I said, you can scan the code. I'm happy to schedule half an hour call with you. Send me your information. We'll do a tear down and give you some tips. Okay? Thank you very much.